Today, on the 26th of August 2026, the story is not another crypto headline. Shinhan Financial Group, a bank managing roughly $100 billion in assets, has formalized a deal with Visa to test stablecoin issuance, transfer and redemption inside South Korea's mainstream financial system. Stablecoins are digital tokens designed to hold a steady value against a currency like the US dollar. Signed on the 24th of August, it makes Shinhan the first top-tier Korean financial group to adopt Visa's enterprise stablecoin infrastructure for a full domestic settlement stack. The hook is simple: this is no longer a niche blockchain experiment. This is one of Korea's biggest financial institutions treating stablecoins as a serious settlement layer, not a side project. The timing is not accidental. In April 2026, Shinhan Card, with a 16.9% market share, partnered with the Solana Foundation to trial stablecoin payments on Solana's blockchain. Executive meetings with Visa were also happening as early as April. Then on the 1st of July, Shinhan joined Samsung Electronics and Dynamo in the OpenUSD project, a global federation exploring dollar-backed tokens as shared payment infrastructure. Last week's agreement pulls those threads together. Why now? South Korean banks can see stablecoin regulation coming, and they do not want to be left defending outdated payment rails. Pairing with Visa gives Shinhan global compliance, scale, and technical infrastructure without building everything itself. Think about what this changes. Shinhan is already South Korea's second-largest credit card issuer. If a stablecoin can settle card payments, merchants could see faster settlement and lower costs, while exporters could avoid slow, expensive correspondent banking for B2B, business-to-business, cross-border payments. Shinhan has the muscle to experiment. Latest quarterly net income was 1.82 trillion won, about $1.3 billion, and assets under management sit near 134 trillion won. Chairman Jin Ok-dong framed the deal as combining Shinhan's financial capability with Visa's global infrastructure. In practical terms, Visa's existing enterprise rails handle identity, compliance, and liquidity, while Shinhan tests how Korean customers and businesses actually use it. The near-term outlook is a controlled pilot, not a launch. Both firms plan to design a stablecoin model tailored to South Korea, then test it in card payment settlements and expand into B2B and B2C services, alongside AI-based payment models. The signal to watch is regulatory. If Korean authorities allow a one-pegged or dollar-backed stablecoin to settle domestic transactions, this becomes a blueprint. If they hesitate, it stays a sandbox. Other banks will be watching because Shinhan's second-largest card network gives the test enough volume to be meaningful. Expect corporate clients and selected merchants in pilot programs over the coming months, with results shaping Korea's stablecoin rulebook. The takeaway is bigger than one partnership. Stablecoins are moving out of crypto exchanges and into the settlement layer of a top 10 economy. Shinhan's move, like its earlier Solana trial and OpenUSD membership, shows banks are choosing to run the infrastructure themselves rather than wait for fintechs to disrupt them. For viewers, the practical question is whether Korea's regulators now open the door. If they do, Shinhan and Visa will have built the rails first. That is the one signal to watch, because it could turn a $100 billion balance sheet into an early mover advantage in programmable money.